Hello and welcome back to Charts and Markets with Maurice L. Wilson. I wanted to talk today about bear market rallies and recoveries. I thought this would be very helpful in this current environment. I'm recording this on July 21st, 2022. And right now the market is in a little bit of what we might call a rally mode in the midst of what is still a bear market. So I thought it would be helpful to just talk about bear markets, bear market rallies, and recoveries. So let's start with a couple of definitions that are going to be important. Bear markets are when the market falls 20% or more from its highest price. Bear market rallies are gains of 5% or more from a low point in a bear market. And then bear market recoveries occur when the old bull market highs are surpassed. So let's look at a chart we have here. This chart is provided by TradingView.com. TradingView is not owned by Wilson Wealth, and neither is Wilson Wealth owned by TradingView. This is a free account, so we are not endorsed by TradingView. So let's just start here with the 2018 through 2019 stock market. And the first thing we'll notice here on the left is that we have a 10% decline. Some people call this a correction, not quite a bear market, but a 10% decline. But that's going to be meaningful that we note that. And remember, the whole purpose of this series is just to get better at looking at charts in general. So nothing is insignificant on a chart. So a 10% decline is something we want to note. Now, when you have a decline like that, or really any decline in a 1-year chart or whatever time span you're looking at, you're looking for that first bottom. That's going to be important. So we see here the market fell from early January through late February and then started to recover. That creates our first bottom. Because we had that fall, we now have a high for this time period. So January through that bottom in late February, that high in January creates our first top of the year. And that top is going to become what we call resistance, because as you see here, when the market bottoms there, here, it starts to rally up here. Now that market has got to take out that top to resume what we call a bull market, if you will, or just a healthy market that's recovering. So we'll see here that it takes out that top, but then it runs into a pause right here. Now, when that happens, what we see is, get my chart here. What we see is that the market starts to decline. And when it starts to decline, it starts to fall. Now, when market starts to fall from this new high right here, what you're looking for is you're looking for it to find support at the old bottom, or let's say the first bottom we have. That's going to be significant. That's why noting that first bottom of the year was very important. We want that market to hit that bottom. And if it's a healthy market, we want that bottom to hold and then rally higher. Unfortunately, that's not what's going to happen. We're going to have a further decline, which is readily seen here. So we wind up having a 19% decline in the market. Not quite 20, and it's like 19.7, 19.8. There's some debate in chart circles and advisor circles and whatever, if the 2018 to 19% decline constitutes a bear market. For the purposes of this video, we're going to call it a bear market. So it breaks support and falls 19% and then begins to rally. Now, what's key is as this market begins to rally from the bottom here and continues to go there, what you're looking for, if you're looking at a chart, you're looking to determine, okay, is this rally something I can possibly invest in? Is this something I can trust? And so you're looking for clues. So the first thing you want to see is you want to see if it's going to take out that old bottom, because that bottom, once you go below that bottom, that bottom now becomes resistance. So we're looking for that rally to take out resistance. So right now the market is in rally mode. There's some resistance at the old bottom. We can talk about that in another video. The video before this one, Charts and Markets 1, we talk about where the market is and where the first level of resistance is. So feel free to check out that video on our YouTube page or our website. But we're taking out that old bottom in this 2018, 2019 market. So we've passed that test. The next test is going to be, can it take out the top? Now remember that the new high that we created before this decline, that now becomes resistance. So we need the market to take out this top to truly recover and start a new bull market. But that's not what happens. What we see what happens is that the market, takes a dip. It goes down. And that's not uncommon. So sometimes when a market is rallying and before it turns into a full-fledged recovery, it's got to take out the resistance. But sometimes it hits it once and then it hits it again. And that's what we call a test. It tests it twice before finally breaking out. And so that's what happens here. Now, once it breaks out, then we kind of get back into a new market. So the new bottom becomes support and the new high becomes resistance. And we just repeat that trend in a healthy bull market. Now, what you'll notice here is that we're just repeating resistance, support, top, bottom. You'll notice what we might call a pattern. And that's one of the key things about studying charts. You're always looking for patterns. The more you look at charts, the more the day-to-day action on the stock market makes sense to you, because you're like, oh, okay, we're hitting support resistance here. So it makes sense that the market's going down. Oh, we hit a bottom here or support. It makes sense that it's reversing. Things start to make more sense the more you use your charts. Now, let's talk about how we can use or learn more about charts. I always recommend buying a book. I'm always going to recommend buying a book. I feel like books give you unbiased information. Well, I probably shouldn't say that. Books give you, let's say, information away from the hype. You want to buy your books, away from someone trying to sell you directly. Do your research. There's tons of sites where you can buy books and look at reviews and really get some good information. And then there are lots of services out there that use free charts. We're using TradingView for this chart. There's others out there that you can look for. And then work with an advisor who uses charts. That can always be a way to get more firsthand information on charts to help your personal situation. Hopefully this video has been helpful. My name is Maurice L. Wilson. Please visit our site, wilsonwealth.com. Thank you.